up, man? So I've just seen evidence that big whales in Bitcoin are actively selling this brief rally. Yes, we've seen new evidence that suggests that these whales are distributing, they are offloading. What does this mean for the Bitcoin price? Currently, we're down 1%, waiting for some key macroeconomic data. We're going to walk through the different scenarios and what it would take for Bitcoin to get back up to some of those levels past 25,000. And more importantly, what does it look like to the downside, and what would that scenario look like as well? Don't forget to smash the like button. Don't forget to subscribe. We're also going to dive straight into some on-chain metrics as well. But first, let's take a look at Bitcoin. We've now had a couple of yo-yo days here to start off this week. A green day followed by a red day, a green day yesterday followed by a red day. Look at the big wicks on these daily candles. That just reeks of volatility in this market, uncertainty, and pretty much waiting for direction. Obviously on Friday we had our big dump leading into this bearish continuation pattern. You can see when you have a channel like this after a big extended move to the downside, most likely, more often than not, you're likely to continue that pattern and fall further down to lower price targets. We're looking here at the 20,000 target. We're also looking at the 18,700 target down here at the bottom of the channel, as well as potential situations that can occur. You can see we're getting some support here from pivot point 1. The next one after 20k would be to come down to pivot point 2 at around 19,300 range. Those are the key levels we're looking at now for the short term. I've done a video on kind of the longer term. Can we go and test 17,600? Yes, that's an absolute possibility that you can come test some of these lows. And when we look at some of the on-chain metrics, which I did a deep dive into last night, make sure you go watch that, guys. I went into about 5-6 key on-chain metrics, which is showing that the relief rally we saw was all but going to fizzle out, right? The environment wasn't set up right. The volumes weren't coming in. The retail traders weren't in. And more importantly, the whales aren't accumulating. Addresses aren't coming in and they're not accumulating. So we're going to cover some of that off as well. Now, before we do that, what are we waiting for? What is the market waiting for? Well, so far we're sitting here on a Wednesday. The market is pretty sideways, but I'm expecting more volatility to come into the market from tomorrow and Friday. Why? Because from tomorrow, we start getting some data. We get our Q2 revision of our GDP figure. Why is that important? If you remember, the first reading of the Q2 GDP explained that we were officially in a recession. We got negative 0.9, we got 0.9 negative, right? Which means 2 negative quarters in a row, which means you're officially in a recession. Now, if they revise that to show that more negative, markets are going to panic. If they revise to show that as more positive, then again, you're going to see that we're not in a recession. So that's the data point people will be looking at tomorrow. Also, the Jackson Hole Symposium starts. That is when the Fed officials get together and they will talk about the economic outlook and their plan. Are they going to be hawkish? Are they going to be dovish? Do they think we finally reached our neutral rate? Do they need to be more accommodative, or can they start to loosen, do they have to further tighten the monetary policy? Okay, so they're also going to talk about QT as well. So everybody's waiting for the end of this meeting, which ends on Friday. Okay, so on Friday, Jerome Powell will give a speech, and that is what everybody's looking toward. He will give a speech. They're going to be looking, is he dovish, is he hawkish, and they're going to react based on that. Very, very important. About 90 minutes before he speaks, we get the PCE inflation data. Okay, so look how they time this stuff. They orchestrate it like puppets, right? We get the PCE inflation data, which will come out, and that is the inflation measure that Jerome Powell uses. So that's going to be an important data point as well. So don't think that this whole week is going to be boring like this. We're going to get some crazy volatility from tomorrow, and I think that is when Bitcoin and equity markets will decide on their direction. Now, speaking of equity markets, what are we seeing? I'm going to come over to the QQQ, but first, I want to show you that the pre-markets are showing relatively flat again today, okay? So this will now be the third red day here if this materializes for the equity markets. And if we look at the S&P here, 3 horrible red days here after about 5-6 days of a rally, right? This is what everybody was getting excited about. Nice rally to the upside. And then we saw the divergence. We saw that at the time, equity markets were still green, but Bitcoin started rotating red, and then it dumped. And now you can see equity markets are catching up. Equity markets are, however, coming up to critical support from this level here. So we need to see, can it hold the support from this level? If I move over to the QQQ, which is the NASDAQ, and bring out the EMA ribbon, you can see it's coming to test its EMA ribbon. So again, it's waiting for Jerome Powell. If he comes out nice and dovish, or has any element of dovish, because they're expecting him to be quite harsh in his hawkish tonality. If he comes out a little bit soft in terms of, oh yeah, we're there at the neutral rate, you know, it's having an effect, financial conditions are really tightening right now, then we could expect to see a nice move to the upside and expect markets to rally. Another index to look at is the volatility index. Look at this volatility, the VIX, the volatility index. It's spiked up. Remember, below 20 and you're pretty calm in terms of volatility. Above 30, it gets really nasty, and anything above 20 is still showing that there's volatility in the market. And you can see we did gap up quite big here to start the week. Big move up here. We're now sitting at 24.1 here on the volatility index. And again, I expect this to start moving to the upside unless Jerome Powell comes out and calms markets down. Okay. Also want to take a look at the dollar index, because the dollar index is what's setting a lot of the tone right now in the markets. As we know, let me just find this for you guys. As we know with the dollar index, as and when this climbs, this is inversely correlated to anything that's denominated in US dollar. Because if the US dollar is getting stronger, then BTC relative to your US dollar is going to get weaker. Stocks relative to dollars will get weaker. So risk on assets start to fall. This is a flock to safety. People move to the dollar in times of difficulty. So if Jerome Powell comes out, if inflation comes out high, see Jerome Powell coming out hawkish, expect this to move to the upside, go create new highs, and that will be bad for crypto. If Jerome Powell comes out a little bit dovish, this could be the beautiful double top pattern which we were waiting for, which gets rejected from that line and it signals a move to the downside, which will finally mean we can get a sustained rally on crypto. So these are the scenarios that are playing out, and this is what I'm looking at for right now. But right now, we have to face it. Dollar index is showing good strength right now, but our last hope for this is a double top pattern, is an M pattern to throw us back down to the downside. That's what we're looking out for here on the Dixie. Okay, now I shared evidence that we are seeing whales starting to sell, but you need to go watch my video from yesterday. I break down these charts in a lot of detail, right? So take the time to watch that video from yesterday. You're going to need to spend some time understanding that. Now, in essence, what I showed you was there's a few different price floor models, and I'm not going to get into it very detailed here, but in essence, there is an argument that we could have that maybe we need to wick down to 17,200 or even a quick flush down to 13,700. I know that sounds insane, but if we look at the previous bear market, we spent 140 days below our realized price. That's this orange line here, the top one. Now, currently, we only spent 36 days below it. We also, in the previous bear market, fell below the balance price and we touched the delta price. Currently, our balance price sits at 17,200 and our delta price sits at around 13,700. We've not got close to this delta price. And if we look at the previous market, that flush down was very quick, a quick touch of that delta price to get rid of those weak hands before a climb to the top. So that's something I'm making sure I'm ready for. It doesn't mean I think it's going to happen. It's just making sure I'm mentally and in terms of my accounts ready to do what I need to do if we do see a 13,000 Bitcoin. Do I think we can get a test back to the balance price at around that 17,000 level? I think that's quite probabilistic, and I think if Jerome Powell is not accommodative, I think that's something that can happen, is we can go and get that test there. More interesting is that the whales are selling. Very, very important. When we were covering the on-chain metrics a few weeks ago, we were looking at this phase A, right, during July. And we were saying, okay, this is very interesting because the shrimps are accumulating aggressively, the dark blue, and also the whales, people with more than 10,000 in their wallets, are accumulating quite aggressively as well. But look in phase B recently, you've got the middle ground of wallets between 10 and 10,000 wallets selling heavily. Remember, this dark red is big distribution, big selling. And also, we're starting to see some selling creep in for the whale wallets as well. The only ones that are mildly accumulating, and even they are accumulating less than they were before, are the small shrimps, the retail investors. So we need to be careful that we don't get caught out, because it looks like a lot of these whales were taking this move here, this relief rally, as exactly that. So whilst a lot of YouTuber influencers were making you feel like this is going to be the next rally up towards 69,000 and beyond, the big whales and the wallets were understanding that this is just a relief rally. This is a chance for you to offload a little bit of your bags or potentially seeing some more pain. Now, the only way we're going to get out of this is with some macroeconomic data to nullify all the on-chain and the technical analysis, right? If Jerome Powell comes out really dovish, then of course we can start moving to the upside, and that would be a good catalyst for us to get to that upside. If we also take a look at the new addresses, not great momentum, low demand in addresses, which shows that, again, that demand is not there to pick up the supply from the people who are just selling, which I showed you. Similarly with minor revenue. Again, guys, if you want the detailed breakdown of this, I spend at least 5 minutes per chart in my video yesterday. So make sure you go and watch that to understand exactly what's going on. But here in terms of minor revenues, they're not showing great strength. In previous bear markets, when we've been ready to climb out, you see this climbs above the 2.5% line, past the 5% line. And here you can see we're nowhere, we're not crossing that 2.5% mark. So anybody who thought this relief rally up here we're ready to go back to all-time highs, you would need that to break 2.5% in order to start feeling that excitement of your next move to the upside. Similarly, take a look at the exchange flows, and you can see that in terms of the exchange flows, there is no huge volume coming in. Retail is not coming in, and they're not picking up these opportunities to get into the market. So overall, what are we seeing? We're seeing the whale selling. We're seeing minor revenues fall. We're seeing that all these on-chain metrics aren't showing a healthy move to the upside, and it was just that relief rally. So now we need to get back into the mindset of, are we going to fall back down to the downside? Is Jerome Powell, is the on-chain metrics going to show us that we need another flush down back to those levels around 17,600? That is what I'm mentally preparing for. Hopefully it doesn't happen. Hopefully Jerome Powell comes out on Friday with some positive news. He's very dovish. He feels like his job is done and the markets can continue the rally that they showed us is possible last week. But until we see that data, we've mentally got to prepare for some of those lower price points to make sure that we've got the conviction. It's really, really important. I posted a video saying we need to stress test our brains. We need to understand that we play out these scenarios of what would we do if Bitcoin fell to 17,000? What would we do if Bitcoin fell to 13,000? What would we do if it fell to 10,000? And make sure you're comfortable with that. And if you're not, and you feel like you're going to panic sell, you're better off panic selling now, right? What use is it holding it from 22,000 now all the way down to 13,000 to panic sell then, right? So if you've not got the conviction, at least be real with yourself to say, I've not studied it. I just followed my friend who told me to buy this crypto, and now I'm stuck holding a bag. Be real with yourself, sell, and then go build your conviction and buy into the market when you feel you're actually ready and you've done the legwork. Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe. If you appreciate this type of content, make sure you let me know in the comments. Go watch this video here, and I'll see you in the next one.